Hi, this is CF Liu. How to invest into the best dividend stock in Malaysia, in Bursa Malaysia, in the Malaysian stock market, KLSE in 2020. So let's get right into it. Now, the first stock I want to tell you is British American Tobacco. Historically, it has been giving dividend like 4 times in a year. If we were able to get what's highlighted in yellow, right, the fourth quarter added up together 0.3, 0.26, and 0.29, and that's another quarter. Let's say it adds up to 1 ringgit and 20 cents. Okay, at its current stock price of 11 ringgit 80 cents, you'll be getting like more than 10% of dividend yield from British American Tobacco. And this is what you read in a lot of these publications. Now, the time of this lesson was being recorded is in the February, early 2020. Watch it in 2021, 2023, and all that. It's still, the concept still applies the same. Any newspaper, any publication that shows you that the stock's giving you a very high dividend yield, you have to do a second level or third level kind of digging, and not just by saying that, whoa, based on historical dividend, I'm getting more like maybe double digit in this sense. The article that I see in one of the business paper in Malaysia, it doesn't really tell you that, and this can actually trap you. Why? Well, let me show you why. So we have established the fact that British American Tobacco give you 10% of dividend. If the quarter 4 dividend actually turns out another about like 40 cents or something, and it turns out about 1 ringgit and 20 cents, right, for the entire 2019, based on today's price of 11 ringgit 80 cents. The price has been sliding tremendously for that long, and then you say, well, what is Liu, what is the problem over here? You can see that the price has been sliding 70% since 2015. It is like something like killing you softly, silently, like a frog boiling in water to death. If you just do a quick Google search, you can see that the reason why the price has been dropping is that there's a shrinking market for these smokers out there, and there is a ban, as you know, in all eateries since I think 2018 or 2019, and of course due to illegal cigarette competition. So it's a huge problem that is affecting British American Tobacco. Now let me ask you, is this high dividend yield justifiable for you to invest or not? The yield is high because the price has been dropping tremendously. Is this still worth your time to invest? Which is why when people tell me there's a high dividend yield, a stocks, a counter that I should invest, I always want to do a second level of checking like what is happening behind the scene. Now, next example is Astro Malaysia Holdings. Is Astro historically give 4 times dividend a year? So if I were to make an estimation going forward, okay, in for financial year ending January 2020, let's say add another quarter of dividend, which is highlighted in yellow, which is yet to be declared, add that up together. If it says that, just assume it get you 8 cents on the entire year going forward. At the price of 1 ringgit and 25 cents, you could easily get a 6.4% of dividend, which is easily like double the fixed deposit rate. However, what could be the problem? You see, if you look at Astro Malaysia Holdings stock price, the price has been dwindling up to 50% accumulated since 5 years ago. Since like, not even 5 years, I think. Oh yeah, I mean since 2018. Now, why is that so? You see that if you do a quick Google search, you can see Astro net profit has been down since 2018. In 2019, I think the net profit actually goes up slightly, but they have been doing a lot of this retrenchment. And at the time of this recording, there's also a news saying that in Malaysia, Astro holds like the major license when it comes to this English Premier League, the soccer game, in the UK. But then English Premier League, they come up with a statement to say that their own is coming up with something like a Netflix, a kind of subscription direct to consumer. So rather than licensing it to TV broadcaster like Astro, and this could further make Astro positioning, because this is one of their prime revenue driver, right? Imagine you have like the exclusive rights to air all these soccer games, English Premier League, which is really big anywhere in the world. So that is Astro for you. Now moving on, another AirAsia. Now what happened to AirAsia? Now AirAsia, it seems like it has not been giving a lot of this consistent dividend, right? In fact, it has not giving any impressive dividend. However, there's a business publication that lists one of the top 10 or even top 20 high dividend yield stocks is actually AirAsia. Now, why AirAsia? It's classified as so because just recently, at the time of this recording, in somewhere in July 2019, it declared a special dividend. If you were to actually calculate that special dividend of about 9 cents per share over AirAsia stock price of 1 ringgit and 20 cents, that's easy 7.5% kind of dividend yield, and that is almost like 3 times the current fixed deposit rate. But do you want to really invest into these high dividend yield stocks? Now, first of all, you have to understand how has the price of AirAsia stock fared over the past few years. Now, just in the past 1 year, the stock price has actually dropped 50% just within the past 1 year. So far, the example I've shown you that the dividend yield is high is not because of the dividend in terms of ringgit or cents per share is high. It's because the yield is high. It's because the price of all these stocks, whether British American Tobacco or whether it's Astro Holdings and even AirAsia, because the price has actually dropped more than half. Therefore, the dividend yield automatically become high. It's just simple mathematics, right? So if you were to actually hold on and buy in now just because of dividend, so you must have high conviction and faith that the stock price would not drop further, and maybe it will actually go back up. If not, just for the dividend of what is the percentage, like 6, 7, 8 or even 10%, you would have a decreasing capital loss or capital gain from here on. Furthermore, at the time of this recording, you know that there is this worsening kind of Wuhan virus, the COVID-19 or 19 going on. So at the same time, if you refer back to the news, EPF, right, a big institutional investor, AirAsia actually lose one of the biggest institutional investor. Of course, more than 30%, I think, is still owned by the two founders, which is one of them is Dato Kamarudin and Dato Tony Fernandez. But EPF also hold a substantial stake. And then at the point of this lesson, this recording, EPF just disposed a huge chunk of AirAsia, right? But still, the sentiment is all across the market. Investor actually dumping the shares, but EPF, as declared, they're actually not dumping the shares because of the news regarding AirAsia and Airbus. No, they are not. But EPF actually already disposed of their holdings in AirAsia, most of their holdings in AirAsia before that the virus outbreak in China, in Wuhan, is going to affect the aviation sector because people are not traveling, right? So it will affect all, the revenue for AirAsia, especially a lot of their flights to China. So the other comment that I really want to top up here is, AirAsia as a group is led by the founder. It's not like your conventional public listed company, right? Whereby the CEO just someone that's been hired to run the show, but for AirAsia, the top guy is actually who founded the company. So it's founder led. Substantial shareholder is also by two of the founders. So really, when it comes to AirAsia, you cannot really go wrong when it comes to fundamental analysis and value investing. Now, but here's the thing. I think it's because EPF sees that during this period where this kind of business condition isn't really supporting the trend of aviation. Because the revenue is going for all aviation companies are going to be affected by this virus outbreak. Therefore, they feel it's better for them to actually take this money out in part into somewhere that generates a better return rather than just sit on these unrealized losses. I mean, that is just a guess, but I think that is why a lot of these value investing methodology today it doesn't really work too well or very well anymore. We are talking about lost opportunity cost over there. So they don't want to lose that opportunity cost. Doesn't mean they are not a long-term value investor. So you have to understand, like, very advanced investors actually know the business, want to monitor the business trend. It is not, it's not the conventional value investing teaching, which is why a lot of people who learn about value investing fail and they don't make money because value investing only teach you how to look at the balance sheet or whatever financial statement that is just like looking backwards. But it's more importantly, you have to actually look forward. And you have to look backwards a bit, but most of the time you have to look forward. Right? And a lot of people who learn about value investing, they still lose money, and without knowing or learning about the business trend, they wonder what happened, right? They thought they are missing something, right? Because this investing thing, it is unlike like spotting an exam question, right? You can't predict what's going to happen in the future just by seeing what has happened in the past, what exam question has came out in the past. So even spotting an exam question, that is not a guaranteed way to score high marks. Moreover, for this investing, there's so many factors at play over here. Right, so I hope that actually gives you perspective of how this really works. About high dividend yield stocks that you see, it could be a value trap. Moving on to next, there's another company called Hevia Board, which is basically a furniture company. Now, historically, what I highlighted in red is what they have been giving the dividends over the years. Now, if I were to also make another projection, like just assume in the entire year of 2019, they're able to give about like 4 cents of dividend out of their share price of 46 cents. Now, easily, based on historical projection, easily that could generate about like 10% kind of dividend. However, that still could actually backfire, because similar to the example I've shared with you, Hevia Board as a furniture company actually had really more than 70% capital loss since 2018, as you can see from the stock price over here. And some more, this company is in the it's a small medium cap company, so the volatility will be a lot more higher than big cap stocks like AirAsia or Astro. The other thing is you also have to understand what's happening to the furniture industry. Furniture industry, if you look at this news piece, basically what they are saying is there is a business coming in, especially after this US and China trade war, right? Because Chinese manufacturers are not able to sell to US, so the business actually goes to a lot of other countries in Asia like Malaysia and all that. But in Malaysia, because of this problem over here, whereby the government say, you know, they restrict your ability to hire foreign labor, and furniture industry need a lot of foreign labor to run their operation efficiently and effectively. So they are having some of this labor problem shortage here and there, which is why they have this business potential business that they're coming in, they can see but they cannot eat, they cannot fulfill this kind of business, and it end up going to like countries like Vietnam and Thailand. And so that is the reason why, despite the high dividend yield, the business are not really growing as fast as expected due to things like government policy change. Now, lastly, I saved the best for the last. This is a company which you might have never heard before, Complete Logistics Services Berhad. Now, if based on what happened in 2019 when they give a 16 cents of dividend, if you look at the price now, it's about 69 cents. That is like more than 23% of dividend yield. It's one of the highest I've encountered so far in Bursa Malaysia. But you have to understand that for this company, there is no single dividend that is declared since 2014. So 2019 was an anomaly. We don't know whether that is really going to continue or not, right? And you do a Google search on this company, there's literally very little or very few news on it, so you don't know whether the dividend will still be expected or not. So it is like once in a blue moon, or this trend is going to continue from now on. So to sum it up, dividend is not about looking at 1 year, it's about the consistency of a dividend year after year. So when you see any publication, business news that tells you some company give high dividend or stocks, do not really take things at face value. That being said, I have more than like 50 kind of stocks in Bursa Malaysia that have been looking up, and these are the company that give you very relatively higher dividend compared to the rest. So what I want you to do is to comment below if you want, you know, to get that list. So I might actually reply to your comment, what are some of the top dividend yielding stocks in Bursa Malaysia. So comments below if you want to know what are the other high dividend yield stocks that you want to monitor, you want to put into your KIV list. The other thing is I want you to actually stay on and go to the next lesson. Check out the description below where I conduct a upcoming weekly web class where I teach you how to really filter the companies that truly give you high and consistently growing dividend year after year. So check out the description below, click on the link over there, register your name for an upcoming web class. And last but not least, I want you to actually look at the next dividend lesson that is coming up after this video. So I'm CF Liu, and I'll see you in the next lesson.